Welcome back to Trading Hour. Well, as promised, we are shifting focus now to the cement sector. In its latest report, ICRA says growth in cement volumes will moderate to 4 to 5% on a year-on-year basis in FY25 on the basis of slower than expected ramp-up in construction activity. Earlier in June, ICRA had forecast a growth of 7 to 8%. They also add that pickup in infrastructure spending will drive cement volume growth in H2 of FY25, and pressure on realization will dampen operating margins of cement companies by 130 to 180 basis points. Ashish Modani, Senior Vice President and Group Head of Corporate Ratings at ICRA, joins us now to discuss more on this. Good afternoon, and thank you so much for joining us now. Ashish, first up, H1, any way you look at it, was very weak as far as cement was concerned. H2, do you expect a significantly better pickup?
Yeah, hi, good morning. Yeah, we are expecting a very healthy pickup in second half of the current fiscal. So in ICRA's view, the likely improvement in farm cash flows backed by healthy monsoon and a upbeat kharif output and healthy reservoir level are expected to boost the rural consumption in second half of FY25. So and that will drive the cement demand for the rural housing segment. And also, if government has to meet this 11.1 lakh crore capital outlay target, then significant ramp up is also required in the infrastructure activity in second half, which will drive growth. So we are pretty upbeat that things will sequentially improve, while quarter one and quarter two were weak because of slower than expected ramp up in the construction activity. But we are building our hope on quarter three and quarter four on both on the infrastructure side and on the rural segment to drive the growth.
So Ashish, H1 volume growth was 2%. For H2, what is your volume estimate?
Around 7 to 8%.
7 to 8%. And therefore, on an aggregate basis for the full year, we should be at 4 to 5%. But
Right.
tell us, in the month of July, when you came out with your forecast of 7 to 8%, what was priced in? Because we know that typically elections do slow down, the construction. I mean, it has a, sort of an impact. Was it just monsoon which caused this sudden shift in your assessment of growth?
No, so basically what we were expecting is the ramp up post-election, because you have model code of conduct in place and there are certain challenges in the overall activity, and it actually slows down. So quarter one was expected to remain weak only, but in quarter two we were expecting a very healthy ramp up in the infrastructure activity. So that has not materialized ideally how it should have been. And but once all the elections are largely done, we are expecting a very healthy ramp up in the all the markets, especially in the western and the northern market, and things should improve sequentially going after. If you look at the region-wise, in ICRA's view, we are expecting southern market to remain under pressure, but other markets should do relatively better off.
Ashish, one thing that we've discussed is the kind of weakness as far as demand is concerned. That has also led to weakness as far as pricing is concerned. Now, given the fact that there has been significant consolidation as far as the entire industry is concerned, do you expect some sequential improvement in pricing? And what is the kind of pricing trends that you are penciling in as far as H2 as well as FY26 is concerned?
You are right. Actually, a lot of pressure on the margin is largely driven by the pressure on the pricing. What has come as to savior is the overall input cost has also come down, so the overall impact is not that severe how it could have been. But sequentially in the last few months, we are seeing a pricing going up in all the major markets, be it in the western region, in the northern region and eastern region. Southern region remain a lackluster thing, but what we are seeing is around 4 to 7% growth at a blended level overall. We are seeing in the last few months, especially in September and October. So that will sequentially improve. Is it still able to match the last year number? The answer is no. It will still remain year on year lower than the last year number, but sequentially things are improving, and that's what industry participants are also saying, that quarter three will be better than in terms of pricing. And but again, if you look at the overall geography mix, southern market, we are not seeing that kind of pricing increase. So definitely the performance will vary across the region in India.
Okay, so 330 rupees per bag was the approximate pricing in H1, right?
Right.
Have these, give us the number for Q3, Q4 across the various geographies, and have you started seeing price hikes already?
Yeah, we are already seeing the price hikes already. And the price hikes ranges in the range of 7 to 14, 15 rupees. That has already happened. In certain pockets, certain companies have taken a slightly larger price hike. But again, I'm telling you, we are talking about a blended level here. The price hike again varies across regions. So the price hike is much better off in the western region, in the northern region, also in the eastern region. But when we talk about the price hike in the southern region, they are largely flattish. So what you are talking about is the largely the blended level. But if you look at the pricing across region, they show a different trend.
Okay. Thank you so much, Ashish, for joining us and giving us a sense of cement. At least for FY25, it appears as the demand remains quite subdued. But time now for a short break. We'll get you more on the markets on the other side. And we'll also be joined by the Money Control Pro team to discuss about their new portfolio launch. Stay tuned.